Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. Today, we're going to be talking about cannabis banking, as well as a couple M&As, opportunities in the cannabis industry, as well as some blunders. On the line with us is Dan Kimmis, CBD correspondent with Good CBD Products. So, recap from last week, Congress had met to go over a new House bill trying to reform banking, making it more legal, making it more advantageous for smaller businesses to get loans, for equipment financing, scaling, becoming a multi-state operator, and just staying in business to be able to pay payroll, whatever it is. It was a huge opportunity. They introduced legislation that would decriminalize cannabis and open doors for cannabis business opportunities nationwide. So the bill called for a 5% tax on recreational cannabis sales that would fund community reinvestments and programs to help individuals adversely affected by the war on drugs. Meanwhile, though, Canada already has banking, and yet they're seeing opportunities to bring in additional revenue with fees. And so that's obviously making it maybe easier for companies to do business with banking, yet they're charging them and taxing them to the point where it's difficult to do business. So we're seeing from the Marijuana Business Daily that one of Canada's top lenders is charging prospective cannabis business owners thousands of dollars for just a routine financial documents, or imposing additional costs to entrepreneurs who want to enter Canada's lottery, specifically in Ontario, for the right to open a cannabis retail store. So the article goes on to say that the Bank of Montreal is charging clients $3,000 for an initial review to look at the documents for operations. And then there's also an annual charge for $1,000 for maintenance, although no service is guaranteed, and that doesn't even include tax. So they have payment of the fees doesn't entitle the client to any services according to the contract that BMO sent out. The fees charged by the bank are anecdotal of the financial hurdles forced on prospective cannabis entrepreneurs, and that these regulators are kind of stifling some businesses because they have other requirements, like confirmation from a bank for a commitment to provide a letter of credit for $50,000, a bank letter confirming the applicant has the financial capacity to obtain a $250,000 cash or cash equivalent, and to top it all off, evidence that an applicant has secured suitable retail space. The point of having banking is to be able to get operations in order to be able to be successful enough to show future investors that you are capable of getting a letter of credit for $50,000 or $250,000 in cash equivalents. But for a bank to say that you can store your cash and savings there, but you need all this money first, is kind of an opposite approach that we might be used to.
Once again, we see first layered taxation, right? And again, I understand everybody wanting their slice. I also understand that at some point, you kill the golden goose. You actually drive it back to the black market. So stifling. One of the things I've seen on the ground a lot is shell shock. Literally, small business. It's near on PTSD, chronic. As you watch the capital move around and you see these larger entities come online, it truly is. It's heading toward M&A mania. I don't know how else to put it. It's going to have to go that way, right? Attrition.
As speaking of, we're already seeing that happen in Canada with the $123 million acquisition from British tobacco giant. So Oxley is a company up in Canada, apparently. I haven't heard of them, but there's a UK tobacco giant, Imperial Brands, that is going to invest $123 million for a 20% stake in Oxley. So again, you kind of need these banks and the services in order to get to this capital in this point. But it's almost ridiculous. It's kind of like if someone files bankruptcy and you need $2,000 to file bankruptcy, it kind of defeats the point when you need to borrow money in order to just get a bank account, or, in the analogy, borrow money to file bankruptcy. It's a silly process, but there is a solution. Some banks that are coming online that are offering solutions for banking, not just a duct tape remedy like some of these money transmitting services, but real banks. So I'm not going to throw their name out there because they don't want to be inundated, but there are solutions for nationwide opportunity for a real bank. And there's other
Hmm.
opportunities too that we're seeing continue to multiply for the U.S. cannabis companies seeking to raise capital. According to an article by the Marijuana Business Daily, the American cannabis industry is far better placed for businesses seeking to raise money than it was a year ago. And this goes hand in hand with the report that we had yesterday about the transition of banking, where it was and where it's going. In 2017, at MJ BizCon, I listened to the secret success of how to raise money, and it was literally about a convertible note. And a convertible note is just a debt instrument. It's an IOU that you're personally responsible for. And if your company is successful, then it will convert into equity and then they'll get shares of that company. So that was the old instrument for finance. Now we're starting to see debentures, like debt equity based on nothing, which is phenomenal. It's showing a normalization and professionalism of the industry. So the article goes in to say that the landscape has grown leaps and bounds from 3 or 4 years ago, where there were fewer than 20 cannabis metal markets in the US. Colorado, Washington were the only states for recreational cannabis companies. And that was a time when cannabis companies had little capital available to them, and investors were outliers on the risk tolerance chart. So the risk factor
Right.
5 years ago were much more greater, and the types of people investing were different than we're seeing now. Just a few years ago, you're talking about giant like gamblers, penny stock, over the counter people, and the risk tolerance and personality back then was a lot more, unscrupulous, let's say.
Well, one of the things that is interesting to see on the ground is, again, it's now time to take those distressed businesses, right? Because those distressed businesses, finding those opportunities, that's, as you know, one of the things I do is we go out and take the temperature on the ground of who's doing what. This industry, there's the gloss, and then there's the reality. And the reality is, on the ground, there's a lot of, the chaos, the tumult. Again, that word attrition.
Yeah, today you might see a lot less risk. There's individuals like myself as a risk analyst that can take a look at it from an M&A perspective, or capital market analyst and financial analyst. So there's a lot more legitimate money out there as well. You're not just seeing, mobsters coming in. There's a lot of people that are taking a deep dive into the topic, just like the topic we covered yesterday. And some of the lessons that we included was that there's a lot of capital out there. So take advantage now with first mover advantages. Start thinking about getting your audit books ready if you want to be ready for a merger or acquisition or file an IPO. You don't want to just ask for money. You want people to look at your value. Every investor, you want to introduce at least one or two of the main people that are in your group, because it's about you as a group, not just about your product. And so we covered all those things in the podcast yesterday about those opportunities. And yet, even with those opportunities comes hurdles that we're seeing in Washington state. So there's only 12 hemp farmers in Washington. People are obviously trying to look for higher margins with CBD or CBG. And so as that transition occurs, with people wanting to try to diversify or getting to more higher margin products, there are obviously pitfalls or issues that come along with that. And so what we're seeing is some cross-pollination issues that some cannabis farmers are worried about as Washington state increases the number of hemp farms they have. There's only 12 compared to 750 in Oregon. They have a couple of rules that try and avoid any issues. But what we've seen, in Oregon in 2017, there was a massive fire in Eastern Oregon, and it sent mold spores into Portland, and their cannabis plants were infected by these mold spores. It went through the filters, past all the filtration systems, and eventually spoiled a lot of these cannabis plants that tested positive for mold. And the farmers knew that it wasn't in-house, that it was contaminated. And so they did some research, whatever, and figured out it was from these fires. And so we've seen that it could be affected from wind, and it takes a massive forest fire to do that. But so there is some validity here to the concerns of cross-pollination, but I don't know what scenario it's going to take. If it's too close, that's definitely going to be an issue. So maybe time will tell if these concerns are going to be validated and we see future lawsuits.
One point I would like to interject is, the fact of the matter is the last thing any of these guys need is another hurdle in their, in their crop cycle, in their going to market, in their, traceability system, in anything. So ultimately, yeah, I would say, Chronic, we need to find a subject matter expert and drag them on the show here so I can do some learning while I'm listening.
And with that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't. And I'm out.